The Chair will now recognize City Manager Dr. Russell Treadway for the purpose of reporting on the second quarter financial status of the city. Mr. Treadway.
Thank you, Mayor. I'm sure everyone's kind of used to the drill by now, so I'll try to move through this fairly quickly and hit a couple of the highlights. This is the second quarter report, and it does contain the usual information that you're used to seeing, including the quarterly report detailed by funds, the always exciting and never disappointing slide presentation, and the fund balance report. And also the slide that goes over the fund accounting every time. We do have, different from previous fiscal years and this current fiscal year, we do have a police and public works facilities fund, which is the fund that we're using to account for our monies, which we're using for the construction of the new police facility and the new public works facilities. Other than that, these are the same funds that we have been operating with for a number of years. Take a look at the first slide here. This has comparisons of our quarterly revenues for the last 4 fiscal years, including fiscal year 2011, which is the current fiscal year we're in. You can see trends and the fact that we do remain relatively constant from one quarter to the next. You will recall in fiscal year 2010, the county was a little late in getting out the property taxes, so that's why you see the first quarter revenues in fiscal year 2010 being so low, and the second quarter revenues in fiscal year 2010 being high. The reason you have the higher level in the second quarter of fiscal year 2011 is that we do receive the bulk of our property tax revenues in the second quarter, and you're starting to see that, and you're seeing the impact of the increased tax rate in the current fiscal year. So that's the reason you see that bar changing so much. But you can see from a revenue perspective, we've had our 2 good quarters, and as we move into the third and fourth quarter, we'll see diminished revenues in the third and fourth quarter, primarily because of just the way we schedule our revenues when they come in during the course of the fiscal year. Similarly, this shows our expenditures. Again, you can see the trends that are there. We a little bit high in expenditures in the first quarter of this fiscal year, again primarily because of the payouts on our early retirement program. So we would expect to see those expenditure levels in the second, third, and fourth quarters to fall back to more traditional levels. This is a look when you combine the revenues and expenditures through the first 2 quarters of the fiscal year. You can again see in fiscal year 2011 that we have additional revenues, again because of the tax rate increase. When you compare where we are this fiscal year to previous fiscal years, we're at about 68% of budgeted revenues. This compares favorably to 62% at the same point of fiscal years 2010 and 2009. So we're a little bit ahead of schedule when it comes to budgets in terms of what we've projected. Similarly, on expenditures, you can see where we are, a little over $4.1 million through the second quarter. This is about 48% of what we had budgeted. And this compares again favorably to fiscal year 2010. At this point, we were at about 50% of expenditures. And in fiscal year 2009, we were at 52% of expenditures. So again, we're doing pretty well in terms of what we've spent so far as we compare it to budgets. This chart looks at consecutive revenues and expenditures over the last 14 quarters, the last 3 complete fiscal years, and the first two quarters of fiscal year 2011. You can see our revenue lines kind move up and down depending on the quarter. Our expenditure lines, again, are staying fairly steady. In fact, exhibit a very slight downward trend through that period. Again, the kind of blip in the first quarter of 2011 is again the payout on the impact of the payout on the early return. This is the sanitation fund, which is another one of our major funds. And again, you can look at this through the second quarter, year to date. You can see our revenues are showing a fairly steady decline. Again, we attribute that primarily to changes in services attached essentially to the economy. Businesses are down, therefore needing less service. Similarly, our expenditures go down since the majority of those are tied to the service demands that we have out there. We flip back to and point out on the general fund, the ending fund balance, our net change in fund balance was very strong in the second quarter, and our ending fund balance at the end of the second quarter is almost $3.5 million. Looking at similar columns here on the sanitation fund, you can see that our sanitation fund continues to operate in the red, and through the second quarter we have a cumulative fund balance, a negative fund balance of about $76,000. If we look at all the funds, we aggregate all the funds together just because we like to see charts with big numbers on. But the reason you see that such a high level of expenditures through the second quarter, obviously, is the construction of the police facility and the beginning of the construction on our public works facility. So those really jack those numbers up pretty good. And here's our ending fund balances, again, through the second quarter. I've already mentioned the general fund, about $3.4 million. And you can see the other funds there. We will be spending down the remainder of the 2005 SPLOST fairly quickly as we move to close out most of those projects within the next 6 to 9 months. And we are beginning to spend money out of the 2009 SPLOST as we move forward with a number of those projects. And we're starting to hit, in March of this year, we'll actually hit the first full debt service payment that's payable out of the 2009 SPLOST money. Previously, we've been able to handle most of those out of the 2005 SPLOST, so we'll start seeing the impact of that in the next quarter. In summary, we're on track for this fiscal year as we move through the second quarter. We begin to see the impact of our property tax increase. Our fund balance is up about $950,000 from the same point in the last fiscal year. However, that increase in the fund balance and those additional revenues are necessary to meet budget for the rest of the fiscal year. We did budget essentially a zero or a balanced budget. There were no additional monies set aside for rebuilding the fund balance, so that continues to remain an issue for us. We have our 2 large capital projects underway, the police department, which is almost finished. We expect to begin occupancy next month. And our public works facility, which is underway, we anticipate that being finished around the 1st of April. And as we look at 2009 SPLOST collections, they are continuing to run at about 90% projections, which is staying pretty constant from where they have been over the last probably 9 to even 12 months. So with that, I'll be glad to answer any questions.
Any questions of the council? Mr. Treadway.
Question. Mr. Shirley, on the previous slide summary, the 2009, one after that, sorry. No, the summary slide, I think the last slide. The 2009 SPLOST collections at 90% of projections. When we were doing our budget, we projected 80% of the amount given. So is that 90% of the 80% we projected?
No, that's 90% of what the original projections were. Then we revised our budgets to budget only 90% of the 90%. So we're actually only budgeting 80% of the original projections.
So we're okay.
So we're okay, yes.
Any other questions?
That all boils down to we are 10% over our projections, correct?
We're 10% over what we have budgeted for. We are 10%
10% under our projection.
under our projection.
10% more than that.
Correct.
Thank you. So does that mean we have more money in the bank or not?
Yes.
Yes.
Okay, thank you.
It's plus money.
All right, thank you. Any more questions? Ms. Treadway, Dr. Treadway, I know I give you a hard time, but Russell, you do a great job on this, and you make it understandable, and I appreciate that. That concludes our committee department reports. We have no consent agenda. We'll now go into old business.